What is up, Gumbo Nation? Got a great show planned for you today. It's parade day. Thank you, Mother Nature. Seems to be cooperating. Go out today. Bayou Charters, float number 16 in the Mad Hatters in Metri. If you're out that way, going to be a gorgeous night. Neutral ground, or the new word, I guess, is passenger side on float 16. So excited about that. Last rider out there, me, G Unit, Bayou Charters, T-shirt Po Boy, the Guru, Jason Fontenelle, Fantasy Football. So going to have a great ride today. So excited. Hit me with a dad cam or a what's up, and hope to see you out there. Expecting it should be nice crowds. Why not? The weather is absolutely gorgeous to knock some back. But, hey, we're going to do the show. We're going to take care of some business this morning and then rock and roll. And it's February, so you know what that means. If you've been dealing with Mortgage Gumbo for any time at all, it's Credit Awareness Month. We've deemed this our month to get you ready to go when it comes to rocking and rolling spring home buying season, and getting you excited and making sure that credit and everything's in check. So today we're going to be talking about how is your credit scored. We're going to break it down into the weeds. So it's going to be really good. I really enjoy this. Something.
All right, 10 seconds.
All right. See you on when we're live. What's cooking, Gumbo Nation? You're listening to Mortgage Gumbo with Dwayne Stein right here on iHeartRadio, and I'm your host, Dwayne Stein, the Gulf South Mortgage Authority. And this is your home show where for 11 snake eyes, more than a decade, a heck of a long time, we've been bringing education and options on what is or will be your largest investment and most valuable asset. What is that? It's your home. So if you're new to the show, welcome to the Gumbo Nation. Glad to have you with us. Want to thank all those who refer over and recommend Mortgage Gumbo and Dwayne Stein. Really appreciate you. If you want to join the show live, 504-260-0995, or you can shoot an email to info@mortgagegumbo. That's right, info@mortgagegumbo.com. Home away from the shows, mortgagegumbo.com. So, parade, you know what? Look, it's February. In February, I have deemed Credit Awareness Month for probably, I guess, maybe didn't do it the first year, but for the last 9-10 years of having the show, I've had February kind of be labeled as Credit Awareness Month. This month, our shows we're going to be talking about and getting you ready maybe for that spring home buying season, tips and tricks on how to fix your credit, repair your credit, right? So on today's show, we're going to be talking about how is your credit scored? How is your credit scored? Because a lot of you, or, maybe you're getting the your scores and you get the alerts and you're like, hey, what the heck? What the heck happened? Well, I can tell you what happened. And this is about when we start to see people become a little bit more interested in refis, right? You're coming out of it's cold. Nobody wants to think about it. Santa Claus just whipped your rear end again. Because as you know, the dude is undefeated. And you know what you got in the last week or so? That statement. Heck, you might have on that statement, you might have something and you're not even with that person anymore. Or you're really evaluating how much you love that sibling that you spent all that money on. So that starts to happen. So what we like to do here, or what I like to do here on Mortgage Gumbo is, what is it about? The whys, right? So we're going to break down for you how is your credit scored. So that way over the next couple weeks, starting with today's show, how is your credit scored? So that way you can make sure that you are maximizing your score. Regardless, for anything, home purchases, refinances, go and buy, a vehicle or something like that, no matter what you have going on. So we want to help you with that, and that's where we're excited with being Credit Awareness Month. So good stuff there, and we're going to have you ready to go. So what I would tell you there is not if you're driving, but grab a pen, a pencil, piece of paper, or I guess for you fancy folks, just go subscribe to any of my social media sites. Go catch the podcast when it's rebroad. Go to Spotify, Apple. You could go over to the YouTube channel, Mortgage Gumbo, and watch it again, right? But I'm old school. So if you got a pen and paper, you sit down, you're having a cup of coffee, or you're about to grab a little bite to eat, that pen and paper, we're going to get you to draw a big circle in it, and then we're going to break it down from there. And then also, still to come, we'll get, renting versus buying. Affordability is always something. So going to kind of give some stats, really, for some renters on that. And then another popular question I get as well is, what's the difference between you and like a mortgage broker? So if we get a chance, we'll get to that. That's a whole show in itself, to be honest with you. But this is the home where, hey, if you're in rate purgatory, right, you're in that locked-in effect, man, what to do? I've got 3%. Call me. Talked to several clients this week, man. There's some great things that we could do where maybe you don't have to give up that rate. A lot of stuff going on. So the home away from the show, mortgagegumbo.com. But it's parade day. So, I mean, I got to be excited about that, right? And Mother Nature has come through. She's clutch. It looks like it's going to be a beautiful day. Going to be riding in Mad Hatters. So if you're out in Metro, give a little shout out. Float 16, Bayou Charters. Go check out his YouTube page. Go follow him on TikTok and social media as well, man. Captain Charlie Thomason with Bayou Charters. His awesome wife, Lexi, who owns T-Shirt Po' Boy. Fantasy Guru, Jason Fontenelle. The Unit, G-Unit. I'm sorry, Fantasy Football Guru, Jason Fontenelle, and of course, and his wife. I got to make sure, yes, ladies, he is married. Wonderful woman, Kathy. And then the G-Unit, he'll be with us as well. So, last riders on the passenger side, or for those who maybe have a little gray in their beard like me, neutral ground. Dave, it's okay to say that. I looked it up. It's okay to still say neutral ground.
They didn't put a ban on it?
No, I was like, where did it become driver and you know what I'm saying? Like, whatever happened
for
to
all the
sidewalk and neutral? Like, what was wrong with that?
The tourists showed up, and they're like, what's a neutral ground?
What's a neutral ground? Yeah. It's funny, man, because when I used to do timeshare, man, I used to make up stories and talk about neutral grounds, and it meant that, when the French and the Spanish were fighting over the city, on Sundays they all partied, and it was a neutral ground. So they got together on
nice.
Sundays and then went back to their other sides and, all that fun stuff.
That works. That sounds plausible.
Hey, do you want to buy a couple $100,000 on a timeshare? While we're at it, I got you in this van here. And so yeah, we'll be riding. Going to have some great throws, Mad Hatters. It's kind of based on the Alice in Wonderland theme. So we have tons of throws. Excuse me. So really, really looking forward to that. Weather's been really great. So in the market, look, what are we seeing? This time of year, it's always a little bit slower. Not going to lie, right? So, to sit here and go, oh, man, it's booming. Purchases are the applications are starting to pick up a little bit. That's why, again, like I said, we do this credit awareness because we want to make sure that when you go and you're ready to make that decision, if you're waiting for that spring buying, right, March, April, that we've got you ready to go. So, and I love to talk about stats, man. It's what I do. I like to use data. And 62% of homes, 62% of homes bought below listing price in 2025. 62%. Now, Dwayne, you're on here telling us 20%, 1 out of 5, are buying above listing. Yeah. Keep in mind, real estate is local. It is local. And what this, in my opinion, shows is that what we've been talking about is as we head into the spring home buying season, there's going to be more competition, and you may see this. But my point being is, why do we talk about headlines and why you've got to look at headlines? Or don't look at it. Don't just look at the headlines. You got to look into it, because when you hear that 62% sold below list price, okay, yet in 73% of markets, home in 73% of metro markets, home prices grew by an average of over 2%. So what that tells you is this. Home buying, it's a wealth building tool. There's opportunity. And for those who are buying below list price, don't think that that means that it's a giveaway program or buying a home in today's markets like going to the pawn shop. That may be some folks who, hey, listed high and came underneath a little bit. But what the good news is for those who are homeowners who understand that home buying is a wealth building tool, the good news is home prices rose over 1.7%. And again, real estate's local. So you may have, I see it all the time, you may have one area where maybe home prices have gone up 2%, maybe 4%, some places 6 or 7%. Maybe some are down a little bit. But now with rates being where they are and being basically 1% less than where they were last year, this spring is going to be different than what it's been the last couple years, Gumbo Nation. Because what you have now is more competition. And we've been telling y'all this for years. For every 1%, the rate drops. 5 million more buyers enter the market. That's called the National Association of Realtors. So we're 1% lower than where we were last year. So that's 5 million people. I mean, you break that down by state. All right, hey, that's 100,000 per state. You break that down by parish. All right, that's 100 more people buying. Maybe, if you got a parish of 40. Whatever it is, right? What it means is more people, more competition. So our job here is not to tell you, oh, don't buy now, or it's a buyer's market, or it's a seller's market. Our job is to prep you either way. So that way, when you do go out and you do go try to get that home, you win. That's the name of the game. So I like it. And that's where I want you to understand. When you see that headline, 62% of houses bought below list price, it's not saying 62% of houses bought below list price of people dropping them by 20%. You know as well as I know that people throw a number out there and they see what they can get. But home prices, when you look at it over the long term, hey, it's a wealth building tool. All right, don't go anywhere. Listen, we got a great show. I love this. This is my passion. My passion is helping people, but more importantly, helping folks win. And credit is something that you, Gumbo Nation, you've heard the message loud and clear. Because so many of you will send somebody over who was turned down by a bank or a broker or somebody like that, and they come to me and it's so simple, and we get them done. Because you either have some lenders that are sticking around and they judge everybody by a credit score, and or they just don't know. Well, for 30 years, 30-plus years, I mean, credit's where I started. This is what I know. And that's why I take this so seriously. So, again, this is a big topic we're going to be talking about. But on the other side of the report, on the other side of the break, JOLTS report came out this week. And we're going to tell you why, what we're seeing here, and why Jerome Powell, he's really just, he's got to go. He's got to go. And I'm going to break it down and give you the whys on the Fed funds rate. Y'all hear that, and you're like, oh, but it didn't drop rates. Does that affect mortgage rate? We're going to talk about, we're going to tell you what happened, came out with the ADP report and the JOLTS report, and discuss that and what's the state of the labor market. Don't go anywhere. I'll find you. It's Mardi Gras season, folks. Float 16, Mad Hatters, neutral ground side. You're listening to Mortgage Gumbo with Dwayne Stein right here on iHeartRadio, 504-260-0995. Welcome back. You're listening to Mortgage Gumbo with Dwayne Stein right here on iHeartRadio. If you got any questions, shoot them over info@mortgagegumbo.com. Or if you want to join the show, 504-260-0995. It's parade day. Float 16, Bayou Charters. You can't miss it. Big, gigantic redfish. Me and the G Unit, last riders on the float. So look forward to see you out there. Hit us with a cam. All right, let's talk about the labor market. Jobs, right? You know, the part that Jerome Powell last week said when the Fed didn't cut rates, said that it's not on his radar. He's more worried about inflation. And that he doesn't have to focus on that. The labor market's solid. I hear you. Well, the BLS report got delayed this week because yet another government shutdown, and it got extended till this Friday, which, by the way, I mean, Dave, you're kind of, and I mean, this is me being polite. You're kind of, you're ghosting goblins. Are you a Friday the 13th believer?
I hate Friday the 13th.
Okay, I knew it because as much as you travel to go to spook houses, I'm like, bro, this has got to kill somebody like you, dude.
Yeah, I can't stand it. I don't leave the house.
Really?
I hide myself.
Salt over the shoulder or whatever all the stuff is, man.
I don't do any of that stuff.
Because you're just sitting out inside.
Yeah, I'm just like, I'm going to tap out for the day. I'll see y'all all on Saturday.
Nice. Yeah. So Friday the 13th, this coming up this week. So, but anyway, so the government shutdown pushed through till this Friday. You know, for us here, what y'all didn't realize, and we're glad this one got fixed, we had a couple buyers that, you know, it affects, because when the government shuts down, guess what shuts down? The old National Flood Insurance Program. Luckily, they got that fixed, and we're good to go. So, ADP came out, the BLS report, which removed the L. What do you get? That got postponed till next week. So we can only imagine what that's going to be. But jobs report, ADP was expecting 48,000 jobs. Got 22,000. That's more than half. This is where I get, and when I talk about this, my passion, my frustration is with Jeremy. This is where Fed's funds rate. I don't look at Fed's funds rate, and I get if you're not listening to Mortgage Gumbo, and I know a lot of y'all around the water cooler are like, nope, Fed funds rate has nothing to do with mortgage rates. Good. Keep spreading the word. But with Fed's funds rate, these are the things that the Fed effect does. So 22,000 jobs. Small businesses, 0. Medium businesses, plus 41. Large businesses, 18. And we'll get to that in a second. So when you're looking at that and you see that for the full year, average of 33,000 jobs. And they've already only gone through the first half of the year. They haven't given a second half of the year yet. They had to adjust down. They had to remove 212,000 jobs. So again, when we go, all this stuff we hearing, dude, so many of you, rates would be so much better by now if they would just report and get somebody like you and I who have to do our job correctly. Can you imagine if all the loans I did, more than half of them I had to call back and go, hey, my bad. Sorry, you really didn't get that rate. It's higher. Or whatever you do. But what we're looking at here is it is a big deal, Jerome. And the JOLTS report, which is job openings and losses, turnover, all that stuff. Job openings is down from December. I mean, this is eye-popping, folks. 6.5 million jobs. And you see AI, all that. You know, I don't know. Do I think AI is affecting some jobs? Yeah, probably so. But you want to know why blue collar is picking up? Because AI can't put an air conditioner together. AI isn't building a house, so to speak. But 6.9 million job openings. Dude, that's eye-popping to me. December, it was at 6.2. They revised that down to 6.9. So when Jerome is saying that the job market is solid, it's not, because you go – so the Fed funds rate – I go back to small businesses that had zero hires. Because what's happening is when the Fed fund – the money small businesses can't afford. I'm a small business. They can't afford to go buy – if they make widgets, they can't afford to go buy more material to buy widgets. And if they got demand for widgets – they've got all this supply, and they can't afford to hire people to make the widgets. And then we talked about large businesses loss. Challenger, which has to announce any businesses, 50,000 plus employees or something like that, whatever. It's crazy when you hear this. In January, layoffs announced was the highest since 2009. That's large businesses. That's why even large businesses was down. And their projected hiring is the lowest in 17 years. So BLS is going to come out next week, which last year, 78% inaccuracy. So why the market is going to react to this, I don't know. Because it's going to be, they're going to come out and Lord knows. You talk about, it's why I don't have any hair anymore, Gumbo Nation, because I'm watching this for you. This is where I'm trying to make decisions. Do we lock in? Do we not lock in? Because it's moving big time. So those are when I'm ripping on Jerome Powell. It's not a political thing. It's because I've got friends. I know small businesses. I'm a small business. It's not about the mortgage rates. It's about if they would be putting this stuff out and it would be correct. We might have been where we're at right now since last summer. And then trending, right? That's what you want, the trends. So we'll see what happens. We'll see what happens next week. Look, we've got the new guy. The JOLTS report came out. The new guy, Kevin Warsh, this week came out and said, look, we're moving forward. We're not looking at past. And what have we talked about? It was so refreshing. I've told y'all this. We've talked about this all the time. The Fed too often goes to where the puck or the baseball was hit, not to where it's going. If you're going to catch a baseball, you can't stand at home plate and wait for them to hit it and go, oh, I wish I'd have been over there. If a guy hits a hockey stick, and I know we don't have hockey here, but it's just an easy analogy. If a guy hits a puck with their hockey stick, they're trying to score, or are you going to stand next to him, or are you going to go in front of the net? So we keep being reactionary, and we need to be proactive. All right, let's get into our weekly segment we like to call Rate Watch. 30-year conventional, 615. 15-year, 572. FHA, 575. Jumbo, 633. VA, 5.77. 10-year, 4.184. So when we talk about the margins, right? And again, let's go back to the Fed. This is where we want the Fed, why we want the Fed to cut from a mortgage standpoint is that margin. When you hear the Fed, the rate is at 3.5. That's where they start. Then you start borrowing from there. So if we're working off of that 10-year Treasury, right, we want our margins to be less. So the good news is that 10-year for us is at 4.174. You add 175 to that, which is what we want, right? Then we're right at about 20, 25 basis points. Last year, that 10-year, folks, was at 4.5, 4.7. The same time last year, 4.765. Right? So that is a big deal. So when you add it back then, you added to 175, you had 6.4, and the rate was the same time last year was right at 7.10. So 70 basis points. So the margin is shrinking. What that means is you're going to benefit from that. Because then if the investors can get the money at a smaller margin, they could give that back to you. Maybe discounting, right? Like, hey, I want to buy a half a point. Well, maybe you'll get more. Because it's not a half a point, your rate goes 6.5 to 6. But you're able to buy some basis points off of that to lower your rate. So we like what we're seeing. As far as the rates go, we're in that mode right now where, hey, we're, 6 to 6.20. It's fluctuating every day, ups and downs. But if you're in rate purgatory and you're not sure, should I make a move? I own my home. I've got a sub-4 rate. Many of you, more people now have a rate over 4% than under 4%, if you could believe that. So if you're not sure, if you're in rate purgatory and you're not sure what to do, let's have a conversation. Reach out. Shoot an email to info@mortgagegumbo.com. Let's have a conversation. Go to the website. Let's chat. Let's see, is refinancing now right for you? Doing lots of rate term refinances. Lots of folks with an FHA loan right now, we're doing streamlines. No appraisal, no income, nothing. Saving people hundreds a month. All right, don't go anywhere. On the other side of the break, get your pen, get your paper, and draw a circle in it. Like we're going to be making a piece of pie. It's Credit Awareness Month. We're here for you. We're going to break down how credit is scored. Don't go anywhere. Look, we'll come find you. You're listening to Mortgage Gumbo with Dwayne Stein right here on iHeartRadio, 504-260-0995.
The monkey's ass, the tiger's ass. Down in New Orleans where the blues was born. It takes a cool
Welcome back.
To blow
Mortgage Gumbo. It's Mardi Gras season. It's in full swing, folks. You out at Mad Hatter's Float 16. Buy you charters. Float, last rider, me and the G unit. All right. It's Credit Awareness Month. So let's talk about how is your credit scored. And look, credit, it's right up there, folks, with air and water. Credit's going to determine your rate, loan program, insurances, etc. So it's important. Average FICO score right now, not bad, America. 714. 10 years ago, that was in the mid-sixes. But what is credit? This is my definition. And in reality, to put it as simple as possible, credit is a reminder of good or bad decisions that have been made. Right? Do you pay your stuff on time? Do you learn the hard way like I did when you graduate from college and you tell the light bill and back then the cable company and the phone company, yeah, I'll show you. I won't pay. Right? Those are decisions that you then have to deal with. So what I want you to do right now is just get a piece of paper out. Again, if not, find me. Go to YouTube. Go to Apple. Go to Spotify. Well, you'd listen there. And you draw a circle. And what we're going to do is we're going to start breaking down a piece of pie. And I want you to take and draw like a triangle. Go from the 12 to the middle of that circle over to maybe like the 20 on a clock. And you're going to write payment history in there. And then underneath that, you're going to put 35%. This is your largest piece of your credit. Payment history. Very basic, right? But it is your biggest piece. And naturally, everyone wants to pay their bills on time, right? But how well do you pay? Do you have any 30-day lates, 60-day lates, 90-day lates? Or are they rolling 30, 60s, or 90 days? And what that means is a rolling means your payment was due in January. You didn't pay it until February. Then you don't make the February payment until March. When you're 30 days late for months at a time, that's called a rolling. And it's a 30, 60, 90, so be it. But the other things that affect payment history as well is, hey, do you have any liens, collections, foreclosures, bankruptcies? Chapter 7, Chapter 13s. And what I want to say about your credit score is this. See, and this is why people trust me, and this is why I believe you when you say that's not mine, or I don't know what that is. Right? Remember when your mom and dad, they caught you, and you're like, I don't know what happened. Hey, how did this glass break? I don't know. See, I believe you. You want to know why? Because 25%, 1/4 of credit bureaus have errors. But when it comes to that payment history, 35%, those liens, those collections, especially those collections, you got to let those sleeping dogs lie. Because if they're older and they're 2 years or so older, they've done their damage. And so many times somebody will call and go, well, I was working with this bank or this other lender, and they told me to pay off this, past due credit X from 2021 and my score went down. Yeah, because you woke that sleeping dog. Because chances are when you call and pay off that credit, they're not going to take it off. They're not going to remove the delinquency. So now you just reactivate it. You stepped on an ant pile. So again, the largest payment, it's very simple here, is payment history, 35%. So pay your bills on time. Now, let's go back to that center of the piece of pie when you're cutting it. And now you're going to go over to where like the 40 would be or the 8 on a clock. Now, this you're going to write amount owed. And underneath that, you're going to write 30%. This is the second largest part of your credit score. And this is what's known as credit utilization. How well do you manage your money? Do you keep it maxed out and make minimum payments on your credit cards? Where are you at? And this is an area where for credit, this is kind of where we play. Because what you want to be looking at on this area, what you want to make a note is how to maximize your score with credit utilization is you want to be under, when you're doing this, you want to be under 30%. So if you have a credit limit of $1,000, you want to be under $300. That's going to help you with your score, help maximize your score. And if you get to 10%, that's even better. But if you need to work in that area, we get it. If it's $1,000 and you're at $600, you might not have $300 to get under the $300 credit utilization. So work in 10% increments and chop it down little by little. Always making sure you're doing what? Paying it on time. But we operate in this area here because that's where we try and win. And here's a quick tip for you. Those credit cards, if you're maxed out, Christmas time just happened, and you score, you're getting your thing in, you get your score, and you're maxed out, hey, call that credit card company and ask them to see if they can increase your credit limit. Because just by taking you that same $1,000 and you're at $600, well, now if they raise it to, instead of being at 60%, and they extend it to your credit utilization of $1,500, well, now you've dropped it way down. And it didn't cost you anything. It's a phone call. It is a phone call. So, again, you've got your, from the top of the hour, or the biggest piece of your pie is 35%. Your second amount is credit utilization. So 65% is how well do you pay and how well do you manage your money. And again, that's where make sure. Just keep in mind 30%. But if you can't get there, it's 10%. Let me say this. If you're not out buying anything right now and you're working towards it, it's okay. We ran a credit report on somebody this week that they used their credit card for business. So when we ran it, it was maxed out. It hasn't shown that they made the payment because they get there, they expense it, and then they pay it off. Well, guess what we did? She showed us proof that it got paid off. We got an update. We got what's called a supplement, updated it, 40 points. So it's all about timing on these things as well. So don't kill yourself if you've got the money, be smart and get rid of it, obviously. You don't want to be paying more on 25 to 30% credit card percentages. But just do your best to start knocking it down. But what I would tell you is, how do you know, right? And always remember, these credit bureaus that you get for free are these credit reports. These are for reporting purposes, not lending. So they're going to have some changes. And usually these scores are a little bit elevated over what your true score is going to be. But let's look at that and figure out a work through. All right, stick around. On the other side of the break, we've still got, 15, 10, 30%. We got 35% of pie left to eat. And we're going to break that down for you, especially the next piece, the length of credit history. You don't want to miss that. Going to give you a couple tips there to win. You're listening to Mortgage Gumbo with Dwayne Stein right here on iHeartRadio, 504-260-0995. Welcome back. Listening to Mortgage Gumbo. Hey, Float 16, Bayou Captain Bayou Charters float. Big old redfish and Mad Hatters today. Last rider, neutral ground side. All right, February, it's Credit Awareness Month, and we're helping you out. We're discussing and breaking down for you how credit is scored. So if you're just joining, hey, go back, check it out. If you want to catch the first two segments, that first piece of the pie, that biggest piece, 35% payment history. Second biggest piece, 30%, is amount owed, or as I like to say, credit utilization. Now it's 15%. So now you got that piece of pie from the middle. Go to like the 50 on the clock or the 10. So really this piece of pie is length of credit history is what you want to write in there and put 15%. And this is how long have you had credit established? And look, we can't change the past. We can't help when you were born. And we also can't rush into the future, right? Somebody that's in college, a college student just starting off with credit, isn't going to compare as well to that person, say mom or dad or aunt or uncle, grandma or grandpa, right? So while we can't change the past, we can't rush into the future. You know what we can do? Hey, we can maybe piggyback off of it. You know, y'all all listen to those stories of how we walked through snow backwards and, hey, we didn't have days off of school. If it flooded, we walked through, we went and all that. Well, hey, now here's how you can take advantage of us old timers. And that's called an authorized user. Because what you can do is, and we know one of the 10 commandments is thou shalt not cosign for anybody, but you know what? You can help somebody by making them an authorized user. You don't have to give them the card, but they could piggyback. You could piggyback off of someone that's got, say, a credit history of at least 2 to 5 years, and their credit utilization is under 30%. Well, by making you an authorized user, you get that, all of that goodness, you get that. Now, that's a conversation to go talk to mom or dad, aunt or uncle. Hey, you mind if you use me as an authorized user? But before you do, I need to make sure you've not been past due in the last 2 years. You pay your bill every month. Okay, good. Can you add me as an authorized user? But we play in this area a lot. And that's why a lot of times you'll hear these banks love to go, oh, go get a secured credit card. Well, it depends on what other kind of debts that you have. So that is your largest piece right there, is your length of credit history. I mean, that 15%. So now we're going to go from like the 10 to the 11 on a clock, or 50 to 55. And that is new credit. Some of you might be checking your new scores or getting your new alerts, and you're taking a hit because maybe at Christmas you got suckered into the old, hey, you want to put this on credit and get 10% off? Well, you established new credit. You probably bought the amount that's maxed out.
2 minutes.
So they gave you $300 and you put $300 on there. You have no length of credit history. So that's why you're seeing your score take a hit there. And this is also inquiries. Now, mortgage inquiries are different than auto and all those things as well. So if you've got a lender out there, don't let anybody else run your credit, this and that. It just depends. Mortgage reports, mortgage scores understand. And usually within 30 days, the inquiries have no impact. And then lastly, let's go from the 11 back to the top of the hour. And that's types of credit. What is your credit balance, secured versus unsecured? In other words, that person that tells you go get a secured credit card, well, if you've only got 3 credit cards and you've got no installment debt or secured debt, like an auto or a regular personal loan or something like that, that's not doing you any good.
1 minute.
So that final 10% is what are the types of credit that you have. Do you have an auto loan? Do you have a couple credit cards? Does it balance out? Gumbo Nation, we're getting you ready this entire month. It's Credit Awareness Month. For those listening, go check it out. Go to Apple. Go to Spotify. Go to YouTube channel, Mortgage Gumbo. Re-listen to this or get with me. Credit does not intimidate us over here at Mortgage Gumbo. Been helping people with 30-plus years that others turn their back on because they judge them by a credit score. We don't do that at MortgageGumbo.com. Mad Hatters, float 16, last rider, neutral ground side. The Bayou Charters float. Look for the big red fish. Till next week, Gumbo Nation, keep stirring the pot.